Hello and welcome to another exciting chapter in tax. Yes, and we're going to talk about in chapter 3 business income and expenses. Yay, it's going to bring in a good schedule known as Schedule C. So let's see where this is going. So, our learning objectives for this chapter. Remember, this doesn't tell us how many videos we're going to have, just all the fancy objectives that we need to learn. 1. After this chapter, you should be able to complete a basic Schedule C, profit or loss from business. 2. Describe the tax treatment of inventories and cost of goods sold. 3. Identify the requirements for deducting transportation expenses. Yes, that's a good one right there. 4. Identify the requirements for deducting travel expenses. 5. We're going to determine the requirements for deducting meals. 6. We're going to identify the requirements for claiming business education expenses. I can already tell some of these may be a little short. 7. We're going to identify the tax treatment of dues and subscriptions. 8. Determine which clothing and uniforms may be treated as tax deductions. Okay. 9. We're going to explain the special limits for business gift deductions. 10. Explain the tax treatment of bad debt. Okay. 11. Basically, we should see when a home office deduction may be claimed and how deduction is computed. Another really good one right there. Then 12, our final one. We're going to apply the factors used to determine whether an activity is a hobby. And this is key to understand the tax treatment of hobby losses, because that is a big thing. We have to know the difference between a hobby and a business, because they have their own special rules. So you know the drill. We just went over all the learning objectives, so we're going to go right into the first one. The Schedule C. Yes, let's Schedule C, the wonderful one that deals with businesses and basically 1099s. If you ever receive a 1099, you're going to fill out Schedule C. So first off, this is for trades or businesses. Mostly that's what we're going to put on a Schedule C. Now when we talk about a trade or business, this is not really ever formally defined in the Internal Revenue Code, IRC. But basically it's any activity that's engaged in for a profit. And again, it's best to report any income you have received, because if the IRS ever catches wind that you have not, you could be fined, put in for tax fraud, so get to go to jail if you get nailed with tax fraud sometimes. So you don't want that. And they're going to basically penalize and put interest on anything that they deemed should have been taxed. So always put all your income on the tax return. Now, tests for deductibility. Okay, these are tests that we actually have to run, and these are for our expenses. So, for an expense to be generally considered deductible for a trade or business, it has to follow 3 simple rules. 1, be ordinary and necessary. Okay. 2, have a legitimate business purpose. And 3, be reasonable in light of the fees that are generated as a result of the expense. some things you have to know that you need to be reasonable on it. If it looks way off, that could cause an audit to take place by the IRS. Even if it's all correct, sometimes it's just best to be reasonable on your expenses. Hey. So, the code does restrict, these are very keys, the deduction of certain expenses. Such as, of course, you can't deduct anything that's personal, living, and family expenses. If it's personal, it's not going to go on anywhere on the tax return. Capital expenditures, that's related to our capital assets or Schedule D. Expenses related to tax-exempt income. Again, if that income happens to be tax-exempt, anything associated with it cannot be used as deductible purposes. Expenditures related to the sale of illegal drugs. Yeah, you still have to report illegal activities as income, but you cannot take the expenses to it. Illegal bribes and kickbacks. Kind of want to see someone trying to deduct that. That's interesting. I want to deduct the bribe that I gave this person. Ooh, does not even sound like it's going to go over well. Yet that person, if they're here in the U.S., has to actually put in income that they received a bribe or kickbacks. Or, again, they're getting nailed for tax evasion. That's a fun world we live in. Okay. You cannot deduct any fines, penalties, and any other payments to government related to the violation of law. Sorry, you get a ticket, can't deduct it. But the key thing is, don't get the ticket. Okay? Lobbying and political expenditures. Again, anything that's basically donating to a political party, we cannot take. Any settlement or attorney fees related to sexual abuse or harassment if subject to a non-disclosure agreement. And those non-disclosure agreements are no joke. If we have it, we are not allowed to do anything on that. It's non-disclosure, even to government officials. So, be very careful of contracts. Some of these are actually very rare that we don't usually see, but they do happen. So, taxpayers who operate a business as a sole must file the Schedule C to report profit or loss. This does mean if you're a sole member LLC, partnership, I mean, you shouldn't be a sole partner, but that can't happen. You need to file a Schedule C. Unless otherwise directed by the IRS when you need to file a business tax return. Now, it is broken down into 5 parts. And that is, of course, income, expenses, cost of goods sold, vehicle information, and other expenses. And we're going to go through all of those as we go through our chapter here. I'll show you what Schedule C is in just a second. Alright, so here is the big old kicker. People forget this. When they're a W-2 employee, they only pay half of their Social Security and Medicare tax. The employer pays the other half. So self-employment tax typically sneaks up on people that switch from W-2 to running their own business, because now they're responsible for the full payment. So this really only applies to anybody that their net earnings or net income from Schedule C has an earning of $400 or more. It means that they will pay self-employment tax. Again, it's made up of our basically payroll. So Social Security, you have to pay 12.4% on the first $137,700 of net income. Medicare tax is 2.9% on all. So you don't even get a little break there. You have to pay it on all. That's how payroll usually works. Again, we should know this. But you really are, when you're paying self-employment tax, you are paying Social Security and Medicare. Now, cool thing is, as the taxpayer, you get a deduction for adjusted gross income equal to half of the self-employment tax. So if you really want to think about it, you do kind of only pay half of it. You get a little deduction, but remember, this is a deduction for AGI. Now, Social Security and Medicare taxes are going to be covered later on, in probably a few weeks, in good old-fashioned Chapter 6. And then Chapter 9 is going to hit a little bit of what has been going on with COVID-19. So both of those, we're putting them on the back burner as we're going to discuss about them later chapters. So, nice little discussion. So, again, after seeing this, you can pause it, reread it if you want to, and think about what you think of the situation. Then I'll go over the debrief. Us. So, we have Derek. Owns a small business and takes one of his clients, who is also a friend, to a very expensive business dinner every week. They enjoy a variety of restaurants and fine wines, and always spend some time talking about their joint business interest. The yearly cost of these meetings and meals happens to be $20,000, and Derek generates $15,000 of fees from his friend each year. Whoa. Even by that, it would seem like he's operating at a loss. Anyway, is this yearly cost deductible? If not, what could Derek do with his friend that would be deductible? Okay. Again, think of what do you think of this situation? Okay. Write that down. Let's see what you get. Now, this is the problem that we're running into. This thing is not going to be deductible. I will tell you that right away because it is unreasonable to spend $20,000 on meetings and meals in a year that are to fine restaurants and fine wines. But they're so lavish and extravagant. I mean, it just wouldn't consider to be reasonable. Now, if he wants to deduct it, then be reasonable. And they suggest meeting for a pizza and have business discussion every week. The expense will likely be considered reasonable and deductible. Again, if you go too crazy, it will immediately send up red flags to the IRS, which they're going to go, that don't seem right. Especially when you only get $15,000 worth of fees from your friend and you're already spending $20,000. I mean, you're operating at a loss of $5,000. Not good. Okay, so let's go ahead and see what the Schedule C is, so we know what we're going to be talking about. So here is the Schedule C. Again, you can go to the IRS website if you want to pull one. I would strongly always say anytime we're messing with any forms to go to irs.gov and look up the forms, because there's always instructions, and the instructions are actually pretty good. Alright, so Schedule C, as you can see, no pun intended, this is again where we put in our information. So basically, name, principal business, profession. We get to enter some codes. Basically, that code tells the IRS what type of industry we're in. Business name, if there is a name. Also business address, if there's an address. And our EIN, if we have an employer identification number. We will also put what accounting method we use. It's most likely either going to be cash or accrual. Again, just basically when you recognize your income and expenses. When cash is actually done, when you receive cash or pay out cash, or when the actual activity was finished. Of course, there's a lot of other items like materially participated, if you happen to start the business, and did you end up paying any body of 1099. So here was the parts that the PowerPoint broke down. Here's our income. A little breakdown of income from what it is. So of course we got our gross receipts, our 1099s, then you got our returns and allowances, and of course subtract 2 because returns do bring down your sales. Then you got your cost of goods sold if you have any. You'll subtract that to get your gross profit. Then of course any other income. This is basically credits or refunds that you received. You get to bump up your income to make it gross income. And then we deal with part 2, which has all of our expenses. Now, they do list certain expenses because these are the most common ones. Doesn't mean that your business will always have all these. In fact, it may have others. That's where we will go to other expenses to list those. This is also where we will put our home office, which we'll talk about later, and figure out our net profit. So net profit is our gross income minus our total expenses and removing the home office. Okay, cost of goods sold. Again, we have 2 inventory methods. Typically, the one that's used the most common is cost, but here we'll list all of our items for cost of goods sold. Part 4, here's our vehicle. And the odds on we'll have multiple vehicles sometimes, but if you ever drive a vehicle for your personal business, you can deduct certain parts of it. Again, we're going to discuss that later in this chapter. And then the last part is the big old list of other expenses that did not show up in the list that the IRS has already provided. So, and that is just a quick look at the Schedule C. Again, we're going to be diving deeper into certain areas of the Schedule C throughout this chapter. So that concludes part 1. Please let me know if you got any questions, and we're going to move to part 2.